Well, team, it looks like the January effect doesn't necessarily mean just the first day of the year, right? It's the January effect. It's for the month. Now we need to see if we're going to be able to have a rally today. What's on the dock for today? We'll talk. Fed minutes released 2 p.m. today. China stocks keep pushing higher. Apple supplier issues. Let's talk about what's going on there. We got a bunch of ratings out today. And of course, GE completing the separation of GE Healthcare. Let's get into it. We also got Tim Seymour excited to get into everything this morning. It's time to rise and shine, team. Pre-market prep. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Let's take a look at the futures markets. Right now, the S&P futures are trading up 12 handles at 38.58, tidy third, a little bit less than a 30-point range. So good call by Mitch. Maybe the January effect is going to take a little bit longer. You have the dollar down 39 cents and 103.91. You have the bonds up over a stick here, stick and a half and 127.23. Crude getting the beats down 236 at 74.57. Gold, it was a breakout up 13.30 at 18.59.40. Silver, it's going north too. That's up 11 cents at 24.35. And Bitcoin futures must be stuck because every time I look at my monitor, they're at like 16.7 or 16.8. They're up $195. It's 16,810. Let's bring in Money Mitch.
What's going on, team?
Triple D. How you guys doing today?
I think he's in the cave. He probably just got a visitor. He'll be with us in just a
yeah,
second.
Yeah, he's in the trade cave, digging out, getting that shovel, digging out, Mitch. But you're chipper this morning. What do we got on the docket?
Yeah, we're going to talk a lot about a lot of analyst ratings right now, right? A lot of action. Looks like they're trying to play a little bit of catch up at the beginning of the year, right? It happens often. Of course, they're starting to call their shots for 2023. And they're taking shots today. We got ratings on Apple. We got it on Microsoft. We got it on different stocks that are very important to the market. We're going to get into it. But one thing that I think you said yesterday, Joel, that I want to really highlight, I think it's an important thing, is that as our leadership goes, right, if it keeps coming down and they keep coming down, I don't expect the market up. It's just tough. It's tough. What did you see in the action yesterday, Dennis?
The value trade came off big time, and that is kind of what is continuing to a certain extent this morning. Not so much the drugs, but the oil stocks. And we talked about the potential turn even in stocks like Caterpillar and Deere. Something wrong?
No, I said they got drilled yesterday. That's for sure.
They got drilled, and they're getting drilled here again this morning. I mean, this is textbook. So people sitting, waiting, didn't want to take the gains of 2022. Boom, first day of trading. They're taking the gains in 2023. ExxonMobil, real rough day, real rough morning here for all the oil stocks here once again. So playing by the textbook, we did see the growth names catch the bid that we thought they might right off the hop. But what happened was Tesla imploded them. So when Tesla started going down, and we talked about this in the pre-market show yesterday, I'm like, if you're long these growth names, you got to watch Tesla. You need Tesla to catch a bid. If Tesla falls out of bed, the growth names got to be sold. And that's exactly what did happen. Is Tesla was your leader. Tesla was your indicator for those growth names. It opened and just started tanking, bounced off Joel's number for a split second, then just tanked all day. Tanked all day, and that's telling you that, you got to go. Because some of these growth names are up 3, 4, 5% in the morning, like the Squares, the PayPals, even that PLL that you were talking about trading up. It turned around and went red. We called that right, too. We called a lot of things right yesterday on the show. This market has been playing the textbook for a while here now, and it played it yesterday, too, except obviously the Tesla imploded the growth rally. So then just everything fell. And then we were really ugly for a little bit. And then at the end of the day, you started to have the bottom fishers coming in, helping out the market, and we get the little bit of lift, in the last 2 hours, the little turn. Today, we get a little overnight rally. It seems like we get these overnight rallies, and then they seem to fade. But today is news day. Today is the analysts are out of their slumber. They're back from their vacations. They're publishing their reports. There's so much analyst action here today. It's sending certain stocks up and other stocks down. That's going to be the story of the day is analyst action. This is analyst day.
All right, but before we get into some kind of micro news and getting into particular stocks, let's talk about what happened overnight action as sentiment was boosted, of course. Inflation data from Europe, better than expected French CPI, and a drop in German import prices were helping the futures action there. Now this morning, of course, mortgage application volume was down 13.2% at the end of last week. Average contract interest rates for a 30-year fixed mortgage rate increasing to 6.58 from 6.34% 2 weeks prior. Definitely seeing the increase there. I know that a lot of people aren't really expecting housing issues. I was expecting a little bit more, but of course, I haven't had the experience here like you guys had. So what do you think? If we continue to see these numbers drop, never catch up, are we going to run into some issues?
Throw it to you, Joel, on this one.
6.5%. Holy mackerel. I mean, that is.
And we're still raising rates.
Yeah. Boy, oh boy.
It's going to hit the housing market.
It has to.
This is why, this market is trading with so much common sense, and a lot of people just are not listening to it. Analysts haven't been listening to it. People haven't been listening to it. If you just sit back and you just analyze the whole macro picture like we said a year ago, and the Fed told you, we're going to go into a hiking cycle, and you sold all your stocks a year ago, you're just killing it. You're like looking at these stocks down 20, 30, sometimes in some cases, these smaller growth stocks down 80, 90%, and you wouldn't be long them. So, I mean, obviously, we didn't do it perfectly either. I still own some stocks, but it told you to lighten up stocks. We've had no indication that the Fed's going to slow down. You see all of these home builder stocks that have had ridiculous rallies in the last couple of months. Who's got the money at 5, 6, 7% to build a home? You're going to go get a mortgage. You're going to build a lot smaller home is what's going to happen. So you got to look and think that these home builders are all value traps still at this point in time. Maybe if they just all of a sudden decide we got to just start lowering rates, that changes. But until the Fed pivots, the home builders have no business rallying like they have. So you can look at these PEs and say they're 3, 4, 5, 6. They're all value traps, in my opinion. I think eventually they pull the rug out from underneath these things too. I've been wrong about the energy, but I think I'm going to be right eventually. I'm early. I'm often early. I think I'm going to be right on this trade too. I think you just got to look at the whole picture and say, I don't know if this is just the type of market to just go all in on yet. The Fed's given us no indication. Why not wait for the Fed to say the coast is clear? So I'm sticking with the bear thesis until the Fed says the coast is clear.
Of course,
looking at the XHB there, I mean, it had a gap up. There must have been earnings on one of the big home builders there, but it's been holding that gap. I mean, they had some rallies. Everything pulled back. As far as the XHB goes, it looks like as long as you hold that, technically, as long as you hold that gap area, I guess it's okay. Let's look at Toll Brothers, TOL. To see how that's been trading. That had a rally. Still kind of hang. You know what though, Dennis? I mean, I know that the bear thesis is there, but we're just hanging on here for some reason. And we've kind of been in this trading range, and I'll just
rotation, Joel, not for some reason.
Yeah.
Rotation is your reason. That's the reason we have held on. That is the only reason we have held on. We've had drugs. We've talked about this show relentlessly over the last year. Drugs, energy, your consumer staples, and your cyclicals, for whatever reason, have had a ridiculous rally. That's what we've held on. If we start losing those, then you got to hope the tech picks up the slack. This morning, tech is helping a little bit here. Yesterday, tech tried a little bit, actually, but you just add it all up, and you're like, there's so much bloody risk out here, and you get 5% for sitting in cash right now. Not that 5% is awesome, but it's a hell of a lot better than losing 5% a month, which is what we've been doing here, I feel like, for a long time, in this market. So, not obviously every month, I mean,
Absolute returns, right?
yeah,
Sound a lot better
like
than
it's gonna come into play. I just can't see just coming in and just saying, yeah, this is the time to buy stocks. I just think you're early. I don't want to be early. I'm always early. I don't want to be early here. Was there a trade for the growth names? It lasted 3 days and Tesla imploded it. Can there be, if Tesla comes back, will I buy some of the growth names? Yeah. You got to leave Tesla on your screen. So relationship trading working. Use Tesla as your indicator. It's getting a little bouncy this morning. It's got to hold yesterday's low.
Yeah.
I think it's eventually looks like it wants to go under $100, but it's your indicator for all your growth names. And then your other names, just by the calendar, started selling off yesterday. I mean, look at Deere. So taking it back to the SPY, Joel, we went on the tangent here. The reason the S&Ps have held up so well is wicked rotation.
Eventually, they're gonna run out of stuff to rotate into. Is that
they're going to rotate into cash, and then that's going to be trouble for the S&P.
Yeah,
that is trouble.
Yep.
Of course, Tesla definitely still struggling. Came down yesterday. Do you want to give any technical levels on that, Joel, so we can move forward?
I'm sorry, on which issue?
Tesla.
No, Dennis gave it right. I mean, a lot of times, you have that spike low. You made a 108 and had two lows at the 108 area. You had to bounce. What you wanted to see today is that hold. I believe the low was right around 104, 104 and a quarter. Let me get the exact number for you. The low from yesterday came in at 104.64. Nothing there on the monthlies. I would say that the close. I would if you want to take a stab, let's see if you get down to the close at 108.10. But even if Tesla, it seems like there's always a thorn in our side here with the tech. And today, I mean, Microsoft moving $6 off a UBS downgrade. I mean,
is that not an overshoot? That's
I
what
can't
I'm curious
believe
too.
that.
I liked it. I came in short Microsoft, so it was a gift. So I actually liked it. I've covered it because I looked at that and I was like, down $6? Is that? There's got to be something else on a UBS downgrade. I'm like, that is it's a neutral. I'm trying to figure out why it was down so much too. I would have thought down $2 on that, maybe $3, but it was down $6. Maybe there's something else that we're missing, and I haven't. There's so much news here today. Chat, if you see something else, let us know, please, because there is so much analyst commentary here today. My head is just spinning trying to read all the analyst ratings and read all the information. It's like a massive news day. Even though we didn't really have anything report, it's just the analyst commentary is out of control today.
Don't worry. That's what you got me for, Dennis. I got you, man.
What else? It was something else?
Let's talk about it.
All
right. Let's do first the UBS note. Let's talk about what was mentioned there from Microsoft. Then I'll mention a KeyBank analyst note. And I think that this is affecting also different stocks because it's more about mobile PC, kind of that kind of outlook into, of course, what Micron's been talking about, how also NAND and RAM are going to be getting hit. They mentioned Samsung in there. They expect inventory correction to continue, pricing pressure in the first half of 23. Things like this into the industry outlook came from KeyBank analysts. But let's do the UBS analyst. Carl here downgraded Microsoft shares to neutral from buy, downgrading the ratings here on the back of a weaker round of field checks on the cloud provider, including Azure, as the view that the office seat growth is likely to moderate in 23 and that Microsoft's multiple already feels fair but not cheap. So he put it at neutral. I think when KeyBank analyst John Vinn came in here and talked about December pricing worsening for month over month and year over year, but improving a little bit on the quarter to quarter basis, demand in mobile and PC remains soft despite inventory levels starting to come down. Third quarter, particularly in mobile and except for cloud. He expects the inventory correction to continue, that pricing pressure. Samsung's decision to increase production will also likely continue pressure pricing on oversupply conditions persistent in 2023. So one thing also to keep in mind is that if you think about it, there's two areas that are getting hit here. It's NAND, NAND, versus also DRAM. And so both sides here, when you're thinking about memory are getting hit, and they're expecting lower demand here. So if there's anything that I think is affecting it, it's this. And this should also affect the stock like Micron. So it's a little bit interesting to see Micron up on this bank note.
I have a position on Micron, so I'll limit my comments there. Trading position. Like I
Yeah.
said, I covered Microsoft already. So I'm out of that one, so I can talk that one. I just think there's so much news here. It's like processing, figuring it all out. I think it's an overshoot still for Microsoft to the downside. But again, Microsoft, I'm just not a fan of. I think the stock, I see what Apple has done, and I don't get why Microsoft has gotten a pass for this long. From 213 up to 260. Yes, it's off the highs, but it's trading like 24 times or 25 times earnings. I think Microsoft eventually has a date under 200. Why I sold my Microsoft a long time ago. I sold it at the beginning of the year. I can't remember the price I sold it at, but I didn't get the top. I think I was sold like 275 or something. Obviously, it would have been nice to get out at 340. But I had that Microsoft for a while, and there was actually Josh. Remember Josh back when he came on our show? Jason's son there that said, I like Microsoft. And that was during the whole COVID crisis. I was like, I like Microsoft at 152. So I bought along with Josh and Josh's recommendation, and I ended up taking the profits. But I'm not getting back into Microsoft anytime soon. I don't think it's cheap enough. I think it's still got a date under 200.
All right, let's get out of Microsoft talk. Joel's muted. That's why I was.
Yeah, I'm gonna do the pre-market low. The pre-market low comes in at 32.81. So, and then looking at the 15-minute bracket, so someone's nibbling here at 233. I certainly would be if I came in and saw it down, $5.5, $6 on a UBS downgrade. Someone mentioned in the chat about filling the gap today at 228.63. I think it's got the momentum. I just would be surprised. I'd be out there not at 228.63. I'd be out there like 229 in case there's a quick whoosh. But
what is the PE, Mitch, on this one?
On Microsoft, I'll give you an update because it's definitely.
I think it's still 23, 24, 25. Wow. It's and LZC with a fabulous question. I don't know if it's he or she because LZC. Isn't a 20 PE
25
good? They're asking the question overall. We've come down so far and we've seen PEs in tech 30, 40. Doesn't 20 sound good? It does if interest rates were 0% or 1%. But interest rates have come up so much that those PEs need to go down because of interest rates. So I would say in a 5, 6, 7% environment, a PE at 20 sounds expensive to me. So what is the PE on Microsoft?
I have 25.
25. It's expensive, folks. If they warn, this thing will get murdered. I don't know if they're going to warn, but I think we're going into a tough economy. I don't want to own P's at 25, 26, 27 in an economy. And again, I can freely talk about this. I've already covered this short, the overnight short, because I feel like it overshot for today. But I still say longer term, I think this could have a date under 200 because it's just valuation's just too high yet.
Hey, Dennis, watch out on your offers here. We just got a relentless bid here in the S&Ps now. Now we're up 18 handles. We're coming up on the pre-market high at 66 1/4.
We're really choppy today.
Yeah, there's not much in here. I mean, the 38 to 3,800, we almost got there yesterday. 3,900 stopped us like on a dime yesterday, well, at least during the intraday market. But we're moving up nicely here. I don't know if we have any 8:30 numbers to shake things up a little bit, but nice bid here this morning for whatever reason.
Yeah, a little part of me thinks yesterday they broke a lot of the retail mentality for that January effect. And I'm thinking that today that could come back into play, and then we actually get the rip that we were looking for.
You could. The shakeout yesterday.
Yeah, the shakeout. Because the mentality,
Tesla. It's not
retail
over.
Traders, they get hit. Like yesterday during that washout, and they're like, oh man, I don't know if I can go for round 2 today.
I think you keep Tesla on your screen. If you're trading all the growth names, people don't like when I say Tesla's a leader, but it is absolutely a leader for growth. The people who were arguing with me yesterday were proven wrong yesterday because Tesla was the reason that all those growth names ended up getting beat. So you got to keep it on your screen. If Tesla can rebound, Tesla starts going 110, 112, 115. those growth names will all catch a bid again. But Tesla opens up at like 109 or 110 and rolls over and takes out the lows of the move, the growth names will all get hit too. There's a lag effect. It's how I've made my living for 23 years, just trading relationships and trading leaders versus laggards and identifying who is the leader and who is the laggard. And it changes. The leadership will change. So it's quick. It's important as a trader to identify who your leader is. But Tesla's an obvious one for the growth names. It's an obvious one for the higher PE names or the no PE names, because a lot of these companies don't even make money. Tesla is still your leader there. Got to pay attention to it. It's the number one stock on my screen, even if I'm not trading it.
All right, let's get into China stocks, and then we'll talk, of course, another leader, Apple, right? Let's get into a bunch of what's going on in China. So China stocks, of course, pushing higher here. A lot of this based on the Ant Group now getting some approval here. I'll read you guys the headline as it looks like, where is it? Sorry about that, guys. All right. So China's banking and insurance regulatory commissions approved a plan for Ant Group's capital expansion plan of its consumer financial unit. Of course, Ant Group's is an affiliate of Alibaba, in which the e-commerce giant owns 33% of this. And this is definitely helping some tech stocks. We've been seeing the China stocks to stay strong. I know that I myself has missed this run, and I'm just starting to think, as a trader, it seems like their markets have bottomed before ours.
Long ago. Look at this thing over the last 3 months, right? November, you made your low in October. Just going with the FXI here. This $30, you're busting over it now, but that was your high before the big tank, right? 29.97. Now you're trading over $30. I don't know. Could this be the comeback year here for the Chinese stocks? They got whacked with our market.
They had their bear
year.
market.
Yeah, but look at these green candles on the bottom right.
And they had their panic low.
Well, here's another point too. Is yes, interest rates are going up everywhere, but I don't hear China like raising rates and raising rates and raising rates here. You've got maybe market fleeing. This rising interest rate environment, looking for another home here too. And here's a bunch of Chinese names. I'm not saying I'm not investing in China because of political risk, but I'm saying what is occurring here is people are looking for other places to go. They're sick of losing money in the U.S. They're looking at these beaten up China names, and they are beat up. If there wasn't the political risk, some of these stocks are trading. To the points chat, Alibaba got down to its IPO low. In October, 58.01, it got down to its IPO low from 8 years ago. Yet the company has grown earnings exponentially over this time, if you believe them.
Yeah.
They've grown so much, and it's come back all the way down. What is the PE on Baba? Here's a good question too. What is the PE on Baba?
It's got to be single.
It is low.
Yeah, it's probably like a 9. Yep, right there, 9.7. A little bit off.
9. You still got a low PE trade here happening, saying, hey, maybe, just maybe, we can believe these numbers, and maybe, just maybe, China's becoming a safer place to invest. Do I wish I would have bought it at 58 or 60? Yeah. But Baba was like 300, 250, 200, 150, 100, 58. It's at the time, it was a really tough call. But it bounced right off where you would think it should have bounced. So hindsight capital 2020 bounced perfectly, Joel, almost to the tick. 57.20 was the all-time low, not the 2-year low or the 3, the all-time low from 2015. 57.20. We bounced off the all-time low at 58.01, and now we're up here at 98. And it seems like the regulatory environment is getting a little bit better. I think I'd be a buyer of pullbacks in Alibaba, but again, I don't want to stick in a long-term portfolio, but as a trade, I'm a buyer of pullbacks.
It's in no man's land today. Someone is just piecing out here at 98. Wow, up 627, 98, 98 and a quarter. Hard to give technicals on this one because it just moves so much overnight. I'll just alert our traders, investors that you did have your August 31st high. That was a daily high at 98.62, and then you got to think about triple digits, and that the last time it traded over $100. This was back on August 29th of last year. It traded 100.91, but it had a bad day that day as it closed at 96.60. So something going on here at 98.20. Let's take a look at FXI. We just mentioned holding 30s, big on that. Baidu catching a bid here too, up over $7. What do we have here? 126.20. Not much in the technicals on this one.
What's
Do
the
we have
P
it?
on this one?
I
It's
bet you-
stupid, simple analysis, but it's important to know right now. Mitch is on it.
I'll
Mitch
tell
is
you,
digging.
it's low.
He's digging.
I got you. It's 12. 12.8.
12. I mean, these are 9s, 12s. This is where money is gravitating to. It continues to gravitate to. And I was hoping for a sell-off in some of the drug names. They sold off a little bit and then they come right back. And you want to know why? The P's are bloody low still. I'd love a pullback in these drug names. I feel like they've gone a little bit too far, but maybe we don't get it. I mean, maybe we don't get the pullback in these names. They don't have to do anything. They've underperformed for a decade. So, and you can argue the same thing with energy, but the problem is energy is so much more, volatile during a recession. Obviously, in a recession, oil demand is going to go down. Is drug demand going down during a recession? Not much.
What's going on with Merck? We got Merck trading up.
Upgraded.
Really?
Yeah. Who
Wow.
I know,
Man.
and I'm out of Merck. I had it forever. It just runs so far, I just couldn't take it
An
anymore. And take the
upgrade?
profits, but yeah.
What is
Upgrade.
going on with this? All of that.
They chase, man. They can't think. They're all lemmings. Sorry, whoever upgraded that, but they can't think. There's probably somebody we know, so I'll take it back. But I didn't even look at who upgraded it. But I mean, there's so many analysts that just go with the trend. They're trend traders. Kramer is the biggest trend trader out there. When Kramer mentions the stock, before he says if he likes it or he doesn't like it, you can almost with 100% accuracy know if he's going to like it or don't like it. If it's
Look at the
trending up,
chart.
he likes it. If it's trending down, he doesn't like it.
Doesn't he act his chartist friends, though?
That's all he is a momentum trader. It's going down. And again, that's the way a lot of traders are here. You know what? It works. It didn't work in 2022, though.
Gotta have
won
tools.
the day in 2022.
Gotta have tools. We talk about this all the time. It can't just be one tool in the tool belt. Well, all right, let's get into...
That's what it is. And I want to just go on that rant, too, because these are good rants you're bringing up here, Mitch. I mean, technicals are one tool in your toolbox. Trend is one tool in your toolbox. But if you were just using technicals, you're like, well, you got to be long ExxonMobil and Chevron and all your energy stocks. And you got to be long, all the, the other ones because they're trending higher. That didn't work so well yesterday. Why did they go down yesterday? I don't get it. The technicals are good. Because it's the first day of January, everybody's sitting on these huge gains for 2022, and they're taking them the first day of 2023. Another tool in your toolbox, seasonality. Use more than one tool. Become a better trader.
All right, let's get into Apple talk. And, of course, what's going on also in China's situation. Wedbush coming in, also cutting target price from 200 down to 175. Citing here that China is in the heart and lungs of both demand and supply for both Apple and Tesla. The biggest worry for the street is that China's economy and consumers are reining in spending, and this is an ominous sign from Apple and Tesla. This was, of course, Daniel Ives, senior equity analyst at Wedbush Securities. He told CNBC, reported this. I think now you're thinking in China's situation, right? Is that there's a key challenge expected to be on the demand side, especially as we're starting to see a resilient high-end consumer might actually start shifting their spending in China to travel, right? Because they're able to start traveling now, and this might be the focus. So one thing that I'd keep in mind is that you might still see some of these casino stocks get the lift, but this is just talking about the whole China situation. Let's get on Apple here, as of course, Apple reported yesterday telling suppliers to build fewer components for AirPods, Apple Watch, and MacBook.
Well, that along with this submarine to market yesterday too, Dennis, early on, along with the Tesla. You're moving up here. Yesterday's high, I don't know. This is in no man's land because I would say until you clear, you got room up to 131. Your high yesterday was 130.90. Your 4-day high 131.04. But you know what? I don't think this is going to rally 4 or $5 today. I think you're going to have to pick an intermediate level ahead of that. I don't even see a close in this area. I got nothing for you as far as resistance goes. Let's just talk about the pre-market high. The pre-market high so far is coming in at 126.68. But that's nothing. At just 127, 127 and a half. Coming back on the downside, you can use the close as support there. Close actually near where to close at 125.07. So it closed a buck off the low. Easier to find support today in Apple than resistance. Yesterday's close. That's the lowest close since I believe sometime in 2021 at 125.07.
A tape bomb's coming, I think, from one of the big guns. I think we're going to get a tape bomb here potentially.
Don't we already know it's Apple?
They were guessing it's Apple.
Right?
Maybe it's not going to be as
everyone's
bad.
been
Maybe the tape bomb's not going to be as
bell.
bad as expected. But, you know, I just think, like, again, 24, 25 times earnings, you're like, oh, it's so cheap. It's not cheap. 23. Okay, well, it's down to 22 or 21, maybe 20 because it's come down a bit. So maybe even if it's down to 20. But that E is based on pretty dang good earnings. And maybe the E continues to go up, but their growth is not there like it used to be. This company is a monster, hard to grow. We go into a recession. The consumer the consumer staples like really that you need, food, you need energy, you need certain things. Do you need to upgrade your iPhone? I don't think so. I think a lot of people did some upgrading of their iPhone. I just upgraded. I've upgraded the 12 recently. So I'm not upgrading anytime soon. I think eventually there's a tape bomb coming. I don't know if it's this quarter or next quarter, but I think there's one bad one coming for Apple. I'm still going to say I think Apple could eventually be under $100.
Ooh, that's not a good. That'd be a bad sign for the market if you see that. I think everyone.
I'm still
already
hedged.
has it.
So full disclosure, I'm long Apple.
You
shares,
got this one
and
right.
I'm
Yeah.
fully hedged with puts. Fully hedged with
Nice.
puts. Been hedged since 155. Have not removed the hedge.
Well, that chart don't look bueno. So definitely the monthly chart's getting scary now.
I look
as
at
we
my
start
portfolio
breaking.
and I was like, I'm up so much on those puts. I'm like, thank goodness I hedged. And it looked bad for a bit, Joe. I remember it ran to 170 after I hedged, and I was
After
like, why
earnings.
did I hedge? Again, I was early. I was early. But you know what? I was right.
Better early
than too late because you're sitting here at Apple. I want to hedge at 155.
They did something else. I mean, the phones, the iPads. I don't know about a car. I mean, you can't get excited. It just seems like they need like Apple. I mean, Apple TV or just something. I mean, they have the eyeballs and stuff, but I just think you're right. It's just like everyone already has an iPhone.
Gene thinks it's still the car, doesn't he?
I don't know.
I think that's so far away, man. The car.
But we've been talking about it for 3 or 4 years, and it's still so far away.
The truth is, in my eyes, is the competition in the car industry is so tough. Why would they get in there? Yeah. I would rather get into more electronics. At least if I was leader, of course, right? There's different electronics that they can get into. Maybe it's cameras, maybe it's webcams, maybe it's more stuff for the computer, right? Yeah. I think at the end of the day, Apple's just more of a matter of going to survive this little rough stage, and they'll be back. I mean, I don't think Apple's going to struggle.
They're not going away
to sell iPhones in the long run. It's just going to be a bump in the road.
Bring up the longer term chart though, Joel. And Tim Seymour, who we're going to have on in a minute here, so it's perfect timing. I actually should bring him in for this segment because I was listening to him yesterday on CNBC and he made a fantastic point. Look at where Apple is from where the COVID. You think about how many stocks, how many tech stocks have round tripped all their COVID gains away. Look where Apple was. Look where Apple was prior to COVID.
Yeah, about
what was
82,
what's that price?
82,
I can't read
30s,
because your charts are blurry and
about
my eyes
82.
are bad. 80. I can even see, like, you could even argue at the lows would go down like 60. Now the lows had no business being there because we know that was just a short temporary from the lockdown. But say 80. I mean, if you think this thing's going to round trip, $80 on Apple, holy wow, that would be ugly for the markets. But it's kind of, when you look at it on this chart, that chart on the right, it still looks like this could fall a lot further. And you just think of a potential, Apple warning, what it would do to the stock. Not going to be pretty. And I think that's why it's weak. People are anticipating that, hey, this might warn. And it isn't going to be pretty. And all of a sudden that PE at 20 isn't going to look as cheap. And it's still not cheap. PEs at 20 aren't cheap. Can we grab Tim?
Yes, we can. He just joined in. Let's go ahead. Let's just bring him on. Let's do it.
Yeah,
Let's not
right into the
stick
middle of the
around. There you
conversation.
go.
do that.
Right into it.
Listening to you yesterday, Tim, on CNBC, I couldn't agree more when I look at Apple here, and I just think, man, you've had so many tech stocks round trip their entire COVID gains back, but Apple's gotten a complete pass here. We're still 45 points. We're basically 50% higher than we were prior to COVID. Why does Apple get the pass, and do you think there's a potential that it could round trip?
Well, and you have the COVID dynamic, but you had a stock that was almost $50 in October of 2019. So by Feb 2020, it was an $80 stock. So people look at pre-COVID levels. You have to think about the re-rating that went on in Apple from 50 to 80 before COVID, which, admittedly, I can appreciate, and in fact, it deserved a software hybrid multiple. We had services revenue that went from 13% to 21, 22%. It's pretty much stalled there, by the way. But I understand, and let me disclaim this by saying I don't have a position in Apple. I like many people, had been long and strong for a long time. Had traded around ranges. I want to own Apple again. I don't need to own it now, and I. Apple is one of these cult stocks. It's also the biggest company in the world. And sometimes people get very offended when you talk about Apple and say it's going lower. It's a phenomenal company. It's so well run. It's got maybe the best brand in the world right now. But the problem is that the multiple doesn't make sense in a world where, if you look at the entire pullback of the S&P in 2022, was really about multiple compression. It wasn't really even about an EPS cut and revisions and dynamics that are probably phases 2 and 3 of this, and that's a longer conversation. But with Apple at 21 times trailing, and that's relevant just because, again, we're talking about a company that hasn't really warned yet in terms of shipments. We got that news out of Nikkei yesterday morning that said some of the suppliers were warned about demand issues more related to MacBooks, AirPods, and wearables and whatnot. But it's not as if the company's broken. It's not as if it's the same dynamic going on at Tesla. It really is a multiple story, and it is, on some level, you have to respect the charts. And I think
what a lot of people don't realize is, especially people who have started in the markets in the last few years, back in 2015, 2016, we were having the opposite conversation because Apple was trading with a multiple of 10. And we're like, why doesn't this get a market multiple? Why doesn't this get any favor? I mean, this thing is like, trading 10 times earnings, the market's trading 20. Why is Apple so cheap? And eventually, maybe it was COVID that just took it off. We got that. So if we decide to come back to a market multiple, or we decide to come back under a market multiple, there could be some more pain ahead for this stock.
Well, and a market that also the structure, this was part of the other conversation we had on Fast Money, and I think we've been having this, and I'm going to continue to make this point. I think the structure of the market overall is going to change. You're not going to have 6 stocks that are 25 to 30% of the S&P, not the NASDAQ 100, of the S&P. And some of this is just about passive asset flows, which, I think we all hope and don't think necessarily that is a secular change that has to change dramatically. I think people recognize long-term benefits of investing whatever money they can, and the equity market over time has proven to be a great place to do it. But the passive flows and the ETF dynamics that have driven the market higher and have rode the 5 or 6 horses to the top. Apple's not going to be 7% of the S&P. I'm sorry, and I also think that, again, this is going to get me some people are going to be adding me on Twitter on this. That's okay. But I'm amazed that Apple hasn't had more antitrust and the talks of breaking up Apple aren't louder than they are about breaking up Amazon and other things. I just think I think the world we live in, Apple is way too dominant, and I do think they push people around, and I think they're in a position to do that, and why wouldn't they? I just think we're going to look back on this period in history and wonder how Apple got away with what they got away with. But that's another show.
What picks up the slack then if we are moving into this environment where we're not going to have the S&P 30% 5 stocks? And obviously, we saw Meta fall out. We saw Tesla fall out. We saw a number of stocks fall out. Is it energy? Is it drugs? What do you think is going to be the big, or is it just a combination of a whole pile of stocks making it up, Tim? What does the S&P look like in 2 or 3 years?
In 2 or 3 years, it can't be dramatically different. I think we're talking about a move that's 3 to 5 years. And remember, one of the other things that I just started doing advisory work for a new ETF that's launched called IDVO. It's the sister ETF of ETF, which is a 2 billion plus ETF called Devo, which is a dividend and an income oriented ETF. The international and the sister product of this launched about 2 months ago, and the things that this strategy is focused on are some of the biggest companies in the world that pay dividends. I look at the world where international investing has also been, I think, under a lot of pressure because of dollar headwinds and whatnot. And I think about just that you're going to see a lot more focus on international markets. Now, you're asking me about the S&P. I guess my point is that I think that the S&P is also seeing a major benefit from foreign asset flows for, again, investors that were looking for technology companies. You don't find a lot of technology companies in Germany. You don't find a lot of technology companies in Latin America. You don't find them, you find them in Asia, but you don't find the same. So I just think you're going to see more real economy diversification back into the S&P, because also this is another one of these asset flows that I think you're going to see at least start to wane somewhat. But I think about the energy sector, which is 4.5% of the S&P weighting right now, and I think most people that listen to this show know where the weightings were at the peak. We probably talked about it with me in the past. They were 16.5 at their peak in 2008. Energy companies are run differently. The announcements by Exxon and Chevron yesterday about more focus on U.S., less capex internationally. These are better run companies. These are companies that are more investable. So I do think energy could probably in the next 2 to 3 years pick up 200 to 300 basis points of weighting in the S&P for sure. I do think that mega cap pharma continues to grow and continues to be a place that you're going to see both reasonable return profiles at reasonable valuations. I think some of the industrial companies are also going to pick up some slack, and I know cyclically there's a problem with investing in some of these companies here, but I do think that some of the big industrials, I think Boeing's going significantly higher. Full disclosure, I'm long Boeing. I think some of the industrial companies in the defense sector are going higher. And I just think you're going to see a little bit more of a slow broadening of the base here. And that's, for market participants, when you talk about the health of a market, obviously you are talking about breadth. And that's something that we haven't really seen, even some of the worst periods of the market. Even in 2019, if you'll remember, we were coming out of the Fed scare of 2018. Markets they had a big run once the Fed kind of eased back and actually looked like they were given, fresh gas, and they did. But really the places that people ran and took the market higher were these 6 or 7 stocks. And I just think that breadth wasn't really indicative of a healthier and broader economy, and it wasn't. So I just think investors need to be thinking about that.
Great thoughts there. Definitely, Tim, on looking into what's going on with our leadership. Now, I do want to think about what could potentially happen. Could anything potentially happen in cannabis? Will we get deschedulization in 2023? I know you stay up with this, Tim. What do you see?
Yeah. So on that marketplace, if you think about what happened in the last month of the year, you had a place where in the first week of December, there was an announcement that not only was there momentum coming from the White House, but you had some behind the scenes comments that the DOJ, who had major opposition even to safe banking and things that were kind of these incremental steps that the legislation was going to provide, was actually on board. There was a Politico article over the weekend. People come in on Monday and bid up these stocks that much more. From that point, where the expectation was that safe banking was going to happen. By the way, safe banking is not listings of cannabis companies on the New York Stock Exchange. It's not suddenly capital markets are wide open for these companies. It's truly about processing and credit unions and trusts and probably more participation by commercial banks. But the fact is that this was seen as the incremental legislative reform that was going to take the market higher and was going to then have the follow through of these other really important steps to get more capital into this marketplace. But when safe banking didn't happen in a lame duck congressional session, these stocks traded down 40 to 50% from those intraday highs that Monday, December 5th or 6th, I forget what day it was, to the year end. That was also absurd. Okay, the expectations that we were going to get something done, I've been pretty cautious on that for a long time. But the fact that these stocks were sold off to levels to fresh lows and well through the levels they were at, even when Biden talked about decriminalization in October, explains to you both the lack of real sponsorship and strong hands that hold these stocks. This is not an institutionally held market. The biggest issue for cannabis stocks are not the fundamentals. it's custody, it's prime brokerage, it's the ability for institutions, hedge funds, family offices, and even some real institutional holders or investors that want to hold it, that can hold it, they can't. And I think actually we're closer than people think on getting some follow through from some of the important custodial banks. They don't need Washington to come on board here. There's enough precedent, and there's actually been enough legislation already to say that what they're doing is not in violation of federal statutes. So I bring it back to that because while that was a major disappointment on the legislative front for cannabis stocks traded to fresh lows when in fact the top 5 or 6 operators in the cannabis space, I think if anything, are strengthened by the delays here in legislation. There will be legislation. I'm going to take the glass half full on all the things that happened in DC in 22 and in 21. There's a very real sophisticated conversation happening at the most senior levels in Washington. I don't think you're going to see something in the first quarter of 23, but in the ways I was very cynical on the last congressional session, I'm much more optimistic on progress here. I think in the short run, investing in some of the top 5 or 6 names, I run a cannabis ETF. Part of what we're doing is trying to invest in that's the sector we want to have and not waiting for a federal headline, but the sector we have today. And I think investors that invest now, I'm sure I said this a year ago, so you can throw eggs at me. But I think this is still a very high growth industry. The illicit and adult and medical markets of cannabis, both from the U.S. and around the world, are more than $100 billion right now. You don't need legislation. These markets are bigger than beer, wine, and spirits. So, there's been a lot of hype. There's been a lot of smoke and mirrors. There's been a lot of high expectation. But there's a lot of reality in what's going on in the sector. And public opinion is certainly not the question. In fact, the only place where politics really matters on cannabis, unfortunately, is in D.C., where it really matters.
We'll see what happens with that. Will we ever get that expansion where we start seeing these OTCs coming to the exchanges? That's really what I'm waiting for, and I think the massive expansion that can happen.
Can we talk hockey for 2 seconds?
Yeah, you got Dennis.
Please,
look at him. Look at him. He went real quick, like, woo.
Let's talk it.
What took so long? I mean, so look.
Apple took over.
So Carolina comes into our barn last night having won, I don't know, I think 11 or 13 in a row. And we shut them down. I mean, look, the Rangers have not had
Maybe this team's for real.
Look, we've got some flaws, but it was fun to watch. I also went to the Garden over the Christmas break with my daughter and watched the Rangers lose 5-0 to the Caps. So, we temper our enthusiasm here in New York, but this is still the great, if not the greatest sport in the world, and might be the second greatest behind baseball. But hockey is such a great sport. The talent level of these athletes, people talk about NBA basketball players. I mean, hockey players, some of these guys I think are the best athletes in the world.
The Ranger team, obviously the goaltending, has usually been pretty good. It's struggled a little bit this year, but I mean, it's coming around. You got Zibanejad though. That's just been a monster. So
yeah, he's kind of put the team on his shoulders, and Shesterkin is, I think, as long as he stays healthy, the guy's a perennial Vezina Trophy winner. But the key is our kids. We got to get, we've got these 3 kids. We had the number 1 overall pick, the 2nd overall pick a couple years back, and late first round. These guys it's time to produce kids. Let's go.
Imagine if those kids were producing like some of these other 1st overall picks or 2nd overall picks. This Ranger team would be the best team in the league. Your picks have not worked out. It's these other players that have really, obviously, like the Zibanejads and Kreider. I mean, with 50 goals last year, he struggled a little bit this year, but he wasn't going to do 50 again. But I mean, if Lafreniere or Keiko, these guys could just do anything.
They're not zombie
Maybe
picks,
they're buried
right?
though. Maybe they're just not getting the opportunity.
Look, you're having the conversation with my boys. You guys obviously have been reading your New York Post sports page, man.
I don't get the New York Post sports page, but
what about my Red Wings? My Red Wings are over 500.
That's BS 500 though. This Gary Bettman 500.
Who are they playing?
Because you start adding up those overtime losses. I don't consider when you're, and I don't know the Red Wings record, but I know they have a lot of overtime losses in there.
Well, look, I mean, they're not the Dead Wings anymore. I can tell you that. That's a young team with a lot of talent, and they've beaten the Rangers twice this year. So I would say that there's plenty of respect from this side of the room. But I think when it comes down to win in the NHL, you've got to have you've got to have 3 lines that can go. You probably
Yeah.
need 4, and you can't have good goaltending. You have to have extraordinary goaltending.
Yeah.
And I think those are some things that are key. But you know,
Well, we'll have to wait and see, right? What happens with the Rangers might be what happens with the market. How our leadership goes, right? How our leadership on the Rangers goes. We'll have to wait and see, Tim.
Mitch trying to bring it back in because
I
half
know.
the chat loves the conversation, Tim. If you could read the chat,
You
and the other
never
half
make this
absolutely
chat. You
hates
never
it.
make this chat happy, man.
Gotta hook them sometimes.
We
I
have
know
such a
what?
high maintenance chat, Dennis. You know we're never ever.
We're
gonna
high,
stay
right now.
as you.
We're always, half the people love me and half the people hate me too, but they still listen.
Well, it's great to have you like always, Tim. We'll have you back and appreciate you coming on in the beginning part of the year to give us an outlook into what you're seeing in 23.
Guys, I love doing this. One of these days, I'll have arrived at my office instead of having to pull it up to a park bench.
I love it.
I like
You
it,
never know
man.
where he
I like
is.
these.
He's in a cab. He's doing cash cab in one. Now he's out in the
We get too
field.
much studio
I love
time,
it.
you know?
It kind of sets the table, a fresh start, new year, out in the park, crisp, Mother Nature. I think we're all feeling it. So, all right, I'll do this again then. See you guys
Have
soon.
a good one, Tim. Take care.
Thanks, Tim.
All right. Like always, that's
fun.
always great to hear from
Always
Tim.
fun.
Let's take a look into the markets. What are we seeing? Any
We're
leaks?
just this
still
is
pumping?
a rally. This is a rally. This is 21
This is for
handle
real,
ra-
Joel? Was the bottom made? Where are the bottoms in?
I don't know.
I'll give you some food for thought, though. And I thought it yesterday, too. The QQQ. Check out the lows on the QQQ. I know you look at the S&P all the time. Go look
Okay.
at the
The
3
Qs,
lows
the
from the last
Qs.
3 days on the QQQ and tell me that isn't your 7-star level for the
8-star
QQQ.
level, 10-star level. I'm
Look
getting
at
a
this.
tattoo
The
star
low-
level.
The low from the 29th, 262.25. The low from Friday, 262.29. The low from yesterday, 262.13 within 16 cents of the lows, those 3 lows. It says there's no such thing as a triple bottom.
Yeah,
It's right there right now. There you go. Technicals helping out here.
Well, look at
Making
the
you cover those
S&Ps
shorts.
though. I mean, and you guys are tough. Whenever I try and get any kind of bullish, but look at this 3,800 level too. I mean, yeah, we dipped in it. We went to 88.50. They gave it a couple pokes last week. I don't know. This is a long consolidation period, Dennis, and I'm gonna stay in the neutral camp. But if somehow we can bust above 3,900 here. This has been a trading range going all the way back since really early December. And there's the range, and up and down, up and down. Yesterday we almost saw both ends of the range. The way the markets are shaping up too, is as far as level goes, the weeklies and the quarterlies, and I think I mentioned this yesterday. They're right in the middle here, 38.50, Dennis. I think you get above 39. I'm not just talking like poke your head above for one day and there's a daily high here. I'm talking about making this a base, making 3,900 support. I think you got some room on the upside here, but they're
We don't go
battling
straight
here.
down. I think it's going to be an ugly year for stocks, but I was hoping we'd get a little bit of a pop in January. I'm still hoping for the pop in January because I want to raise more cash. I'm 50% cash. I want to raise more cash. Remember I said if we ever went to 420, I'd sell it all and put it all in like 5.1% and sit back and wait for the recession to happen. But we never got high enough that I was like, and we came close, and I wish, obviously, hindsight capital is 2020. I wish I would have did that. It takes a lot of guts, though, dump your whole investment portfolio, put it all in cash, and then just think you're going to get the timing perfect. It's like the person selling their house. They're like, well, I'm going to sell my house, then rent for 2 years. The house prices all come down, and then I'll rebuy my house, and I'll make all this money. The trouble of the matter is that the drift upwards, eventually gets you, and the timing, is always, balls in the air. There's new information always coming in. It's tough to time that perfectly, which is why I never go 100% cash.
Well, let's talk about GE completing their separation from GE Healthcare, as GE Healthcare Technology starts to trade today and joins the S&P 500 under the ticker symbol GEHC. And so keep that on your mind.
Yeah.
We'll see what happens there. Can that get the lift? And I mean, something that I'll keep watch, right? These stocks have been making moves, and maybe the healthcare is going to be better than regular GE. Who knows?
So I was long GE in my overnight account. I totally forgot about it. And I was like, boom, GE's down like $20. I was like, it was spin-off day. And then I'm like, where are my shares? I got this I got a fractional share on a spinoff. How the hell do I sell a fractional share? I guess you can do it. I'm in IB there now, but I got like I got a bunch of shares and I got a 0.3333 along with it. So usually they give you a little cash, for the fractional part, but I guess because we can trade fractional shares now, at least in a lot of these retail brokerages, that they actually give you a fractional share. I've never actually had a fractional share in my portfolio before, so it's interesting. But I'm going to have to, I still have a position. I sold some of this GHC right away, just because I think this is the day when they get these spinoffs. Sometimes, they come in just because obviously people, have these shares and they just don't want them and they get rid of them right away. So sometimes you see some weakness ahead of that. So I don't usually buy a stock, and usually the spinoffs sometimes can show some weakness after, but I don't know. And I still have a position in GE. So I'll limit my conversations overall.
I have no idea.
I have a little fractional share of GEHC plus a little bit extra on there.
Where is GE? I mean, now that they do the reverse.
I know, yeah.
Now they do the spinoff.
I guess you go to the old support, Joel.
I don't know.
Forget all the spinoff. Or just say the technicals is 61.88. You got another stock out of it.
We were talking about the weighting in the S&P, and there was at one, Dennis, we've been following this for so many years. I mean, there is one point when ExxonMobil was the most valuable company, right?
Yeah.
And the number one component, 2014. There also was a time where GE was up there too. Now we'll never figure out what the truth. I still think at $13-14, but really can't help you with the technicals on these folks because obviously with the spinoff with the GE
makes it a mess. So
it does. It does.
Some of your charts adjust for this. Sometimes they don't. So I don't know. We're gonna see what happens here. I don't know if they does your charting software adjust for the spinoffs? I mean, they adjust for splits.
I don't know.
They adjust for spinoffs. It just looks like a mess there until you start getting some more data in there. I hate
you
the
need
spinoffs.
Price discovery. So,
but at least I got the shares this time. Like, it was worse when Intel, they
Did you see this Mobileye, Dennis?
It's ripping probably.
No, I know. We don't even get to participate in it, Joel. Like, we're still long Intel, but they say, oh yeah, you're participating because Intel owns it, so you're actually participating.
Yeah, really.
I want to own the shares directly. GE did it right, at least. At least I got the shares. I could say, I don't want to own GE Healthcare, and I dump it. I wanted the Mobileye shares. I was so excited. I was like, oh, Intel spin off Mobileye. I'm going to get Mobileye shares. Oh, no, you don't get any. But you still own Intel, and Intel owns Mobileye, so you're okay. I'm like, I hate that.
Not okay.
The shares, worst thing ever.
I'm surprised this Mobileye's been rallying with what's been. I mean, I always looked at them as more
with the destruction that's happened in EV. Mobileye's actually held up pretty well.
Yeah,
I'd sell it, but we have to sell our Intel to be able to sell it. I guess we could short it.
One that to keep in mind with that GE that I see already coming down in the pre-market could be also what Dennis talking about, some of these value breaking. Honeywell down in the pre-market there.
Downgraded.
Big level underneath it, 209.
I think these all break. I'm of the opinion. And maybe I'm wrong. Caterpillar came back yesterday. We started to break. Deere tried to come back yesterday after trying to break there. So they're holding up. The value trade's still holding up here. I just think eventually the recession worries are going to cave them all. But yeah, maybe I'm wrong. Maybe we're going to get a soft landing. We're all going to have, butterflies and rainbows. All going to be exciting. We're all going to go back to all-time highs. Everybody's going to get their money back, and inflation will just continue to run rampant. That's the other scenario. I don't think that scenario is happening. I think we're in I don't think we're in Kansas anymore, Dorothy. I think eventually these interest rates are going to hit the economy. I think eventually these earnings are going to start to come down, and those P's are going to go up when that E comes down.
All right, I'm going to let you guys finish up here. Great job today, and be back with you with at the close later on. So everyone have a good day.
Looks like there is some news hitting the tape right now. And I don't know if people knew about this. It seems, I don't know, but Microsoft news. So Microsoft planning a $10 million investment in autonomous driving startup. Gatik. It's GATIK. So I don't know the company either. It looks like it's a California-based autonomous driving startup.
Yeah.
So this was released by Reuters. It just released a little while ago. So I'm literally reading it as you guys are. It looks like it's interesting. In January 2021, of course, Microsoft invested in General Motors owned robo-taxi developer Cruise, but seems like they're dipping more into autonomous driving.
Mitch, can we give the CRM news here too? Because this just gives
Yeah,
you
the CRM.
the environment that we're
So
in.
much. There's so much.
It really tells you what this market wants. This market isn't about growth anymore. This market is about cutting expenses. And they are so rewarding stocks that are cutting expenses here. You got Benioff. It's on CNBC right now. They're talking about Benioff saying a challenging environment. Normally that would be bad for a stock when your CEO says this is a challenging environment. But nope, they did a 10% work cut, or Salesforce cutting 10% of the workforce. So they're rewarding the stock here for this. I don't know if this lasts. CRM is on my shopping list. But again, I don't like hearing challenging environment. So I'd actually be selling this rip. What are your thoughts here, Mitch? Did I miss anything there? I think I took all the news away from you.
No, you did. You nailed it. There's no need to cover it. There you go.
Yeah.
You got it, my friend. And I mean, it's interesting to see it up on the day. One thing I will note is I wasn't looking particularly at Salesforce yesterday, but I did notice that Oracle was holding up relative to like the other kind of tech names. Look at that daily chart. That's not looking too bad there for Oracle. Of course, it's similar stock Salesforce. I think that these are starting to turn around. Is it the PE there? It could be.
It's lower. I think it's Oracle's like 12 or 13.
CRM is 23, and then Oracle, I mean, they had decent earnings too. Oracle's earnings wasn't that bad. 17. 17. So I think you're seeing a little bit more of what I would think is Oracle lead a little bit here. CRM kind of follow that action. So if I could see Oracle continue to rise, I might be looking for Salesforce to continue to get the lift here. Even though, like you mentioned, it's kind of weird. We hear cutting, and now stocks are going up. A lot of that
we've seen that though. For the last back part of the year when they're cutting,
layoffs.
The investors want to get rid of the fat. The investors are sick of so many people making so much money in these tech companies here, and they want to get rid of the fat. You know what? They probably can get rid of the fat. Think about what Elon Musk did in Twitter. He's just like, these people and these people making this much money, just cutting out the fat, efficiently running the company. I mean, nobody runs a company more efficiently than Elon Musk. You think about the profit margins he has on those Teslas. I still love him as an entrepreneur. Not invested because of, the valuation. But again, I love Elon Musk as an entrepreneur. And he's a capitalist. And he's like, this is all fat. We're going to get rid of the fat. And that's what the companies need to do here. If we're going to go into a challenging environment, as Mark Benioff, who is very connected, to all of these companies, half of these companies, he's spun off or he's been connected to. There's nobody that's going to feel out the tech environment more than Mark Benioff. And if he says the environment's getting challenging, I'm going to listen to him. And obviously, they're looking to cut the fat out. So he's positioning Salesforce for a more challenging environment by getting rid of and cutting expenses. That's not great for the overall market, though. And that's not great for the overall economy, because a lot of these companies do not cut the fat nearly quickly enough. And if we're going to go into a challenging environment for CRM, we're probably going to go in a challenging environment for all cloud names. And if they're not cutting expenses, they could be hit, they could be hit during this recession. So props to Benioff for identifying it. Props to him for, cutting back. A very well-run company. Got to respect Mark Benioff. Very, very smart person. Done so much as well. But that doesn't make me feel all good to come in investing in cloud names today. When he's saying, that basically one of the king of clouds, that, we're going into a challenging environment. Here's another word. It says stocks are down, and he sees there is a storm ahead. This is coming from Mark Benioff. This isn't coming from Dennis Dick. This is coming from Mark Benioff.
Yeah, one of the leaders. And I think that the important thing there are these stocks recession proof, right? Are these stocks recession proof? Well, I think that you're starting to see that if the leaders are trying to warn about what's going on in the environment, well, what are some of the smaller software names going to do, right? Like, let's say some of those companies that came out, like let's say like an Asana, right? What are these companies going to do? You don't think companies are willing to drop Asana? Well, I think they keep Salesforce before they're dropping Asana, right? And so I think at that point, you need to start looking at what companies could disappear here, what companies can survive in the software names. And of course, a lot of these brand new ones are going to be in trouble. We'll have to wait and see, find out what's going on in software. Any last thoughts before you get out of here, Dennis?
Just continuing that thought. So some people are saying, oh, you want people to lose their jobs. You know what? Some of these jobs that people are making $200,000, $300,000, $400,000, $500,000 a year shouldn't be there. Some of these mid-management jobs, yes, I think some of the fat needs to come out of this. And I think, that is what we're seeing. And when good times are rolling and we're in an expansion, everybody can win. But at a certain point in time, when you start getting into tougher times, some of these mid-management jobs need to be cut. It's just a sad part of the state that we're in. You can thank Powell for that. You can thank inflation for that. It was Powell's fault at first for obviously keeping rates low for too long. And that allowed the fat to grow in these companies here. But now that he's taken away the punch bowl, the fat has got to get cut off. And that's what's happening here. So it's a tough decision. For Benioff to cut 10% of his workforce, I'm sure it's a really tough decision. Some of these people are very, very good people, probably very good at their jobs as well. So, you feel bad for those people, yes. But again, some of these jobs just, they were making so much money. You hope they saved some for a rainy day. I'm not talking about, cutting jobs, for the blue collar worker. We're talking about mid-management where people are making high 6 digits, even 7 digits, in some cases here.
Yeah.
That's a lot of money. And it's those jobs that probably are going to get slashed.
Yeah, and one thing to keep in mind, right? I mean, at the end of the day, this all comes from reactionary, from the monetary policy. That's what I would say. And so if there's anything that we need to keep and watch, it's monetary policy. And it's going to happen. There's going to be times where we're going to run into ruts. And it looks like the Fed is trying to break it, right? That's what they're trying to do. They're trying to break demand. Well, they're definitely doing it. So it looks like CRM struggling there, but Microsoft struggling also. CRM getting some lift. It's a stock picking environment out there, team. Be careful. We'll see if we get the January effect today. Dennis, go do what you do best, my friend. Get to your trading
thanks everyone. Even I love you haters too. I know you guys were really out there today hating on me. I love you too.
It's the part of life, man. I get it all the time too, Dennis. And believe it or not, I even get copycats too, right? I mean, it's just a part of it. One thing that we'll do for you right here on Pre-Market Prep is always try to be transparent, honest. What we are seeing, like always, you guys make your own investment decisions. We can't make them for you. One thing that we can do is point to a flag here and there, some levels for you guys to keep on watch. And then it's up to you guys to go into execution mode, right? That's what it's all about, especially in trading, swing trading, and investing. We got to make our own decisions. I hope that we help you guys have some better tools in your tool belt. And I'll see you guys on live trading up next. Don't miss it. We got Lloyd Ryan back. And of course, Zunaid getting into the action. I'll see how my swing trade is going in Duke Energy. We'll find out. Stay tuned, team. Hit the thumbs up. Come on over to live trading. Let's keep it going.